From New York City, for our viewers worldwide, I'm Matt Miller. We're looking at futures that are pointing slightly lower as Nvidia falls in the pre-market. The countdown to the open starts right now. Coming up, futures are flat as investors await the latest read on inflation this week. Political risk is also in sight as Trump and Biden gear up for their first debate on Thursday. Plus, how much upside is left in this bull market? We'll bring you the results from our latest investor survey. But we begin with a big issue. Is the market rally starting to broaden out?
It's difficult at this point, though, to look across and say, right, we need to have a broadening in the rally. But that broadening in the rally can only take place if there's still a sturdy economic backdrop. Now, we are generally quite positive on it, but we are hearing more and more clients actually really worried about the economic backdrop. Real concerns starting to creep in to the point that actually when we think about risks, or we're hearing about risks, we're hearing more about what's going to happen with a hard landing than with an acceleration.
Joining us now is Keith Lerner, Co-CIO and Chief Market Strategist at Truist Advisory. And Keith, I got your note a couple days ago that you were downgrading tech from an overweight to a neutral. I have to say that my jaw dropped. Did that take courage?
Well, good morning. Happy Monday. It does take courage because there's so much momentum. But the reality is this. We've been overweight since November. It's up 40% since we upgraded to overweight. It's outperformed by about 15%. And as we looked at the data, we're very data-driven. On a one-month rolling basis, it outperformed by about 11%. You have to go back about 20 years to see tech outperform that much in a month. And most of that last move up was a valuation expansion and sentiment. So that was different than most of this rally has been more earnings-driven. But I also want to be clear, like we're still positive on tech longer term. We just think on a short-term basis, it's got extended, and we don't think this is the place to chase it after that strong outperformance. I
just want to give credit where credit is due, Keith. I mean, it looks like you're making some really smart calls. You upgraded stocks back in April. We're up about 10% since then. You downgraded tech a couple of days ago. We've seen at least Nvidia is down, maybe for the third day in a row today if it drops in the cash trade. What is driving these decisions? What's the data that you're looking at?
Yeah, well, first, I appreciate the good calls. As a strategist, you have good calls and bad calls. I would say in general, our process over market cycles has proven to work generally. And we look at the weight of the evidence, and we look at things like earnings momentum. So right now, one thing why we're still somewhat constructive of the market longer term, even though we expect more of a consolidation, is earning trends are moving up. We think the economy is still relatively resilient. But we also look at things like sentiment. We look at, relative performance as well. So what we try to do in our work is when we start to see the evidence kind of tilt less one way, we try to bring in, positions, or like in April, at the end of April, sentiment got stretched to the downside. We had a nice correction. We looked at historical data saying the average correction is 5 to 10%. So when we got down 5%, we said that was good enough. So again, it's we have a lot of humility with the overall market, but our process is our guiding light.
All right, I want to get back to this, Keith, because obviously if you don't think tech's in the leadership, but you're still bullish stock, somebody else is moving into that prime position. Right now, though, I want to get to Mike McKee because investors are looking ahead to Thursday when we get the Fed's preferred inflation gauge, the PCE. He's Bloomberg's chief economics and policy correspondent. Mike McKee joins me on set now. So, Mike, what are we watching ahead of this really big week for political activity, but maybe not for data?
Well, we could see a big trade on the political activity if there's some kind of performance by one candidate or the other. But otherwise, it gets back to what Seema Shah was saying at the top of the show here, that investors want to see the economic climate for going forward. And we have a new Bloomberg survey that suggests not bad, not great, not bad. The latest survey just out now for the GDP numbers for the year. They see 2%, down from 2.2% in this quarter and then 1.6% going forward. So not a lot of change there. The change comes in consumer spending drops off a bit. Business spending drops off and comes back. So it kind of leaves us about where we are. When you look at inflation, the question you asked, Matt, the PCE, economists think it's going to fall in the second quarter and in the third quarter, maybe go back up a little bit in the fourth quarter. But if you're talking CPI, goes the other way. And then employment. employment is going to slow as the year goes on in terms of jobs created, but unemployment stays about where it has been. So the bottom line from economists is that we're not going to see a recession this year, but we are going to see slowing growth. Now, you can figure out with your guess how people are going to trade on that. In terms of this week, you mentioned the political debate on Thursday night. That leaves us to the analysis of it on Friday, and the PCE, which comes out for the month of May on Friday. Now, after PPI and CPI, economists have plugged in the numbers. They're usually pretty close on this, and they do expect an improvement, which would be good news for those who hope for an earlier Fed cut. Rest of the week, there's some Fed speak. Don't know that it's going to make a lot of difference given the fact that data is driving everything these days. Maybe the Case-Shiller home price index. People are watching housing, but also tonight we have Game 7 of the National Hockey League Stanley Cup Finals, and it's June 24th. So you've got that coming up as well.
Florida has a fourth chance to win the Stanley Cup.
Yes.
And what an exciting game. I'm definitely tuning in for that. Mike, thanks very much. Michael McKee there talking to us about the economics that we're going to be watching. And Keith Lerner of Truist Advisory is still with us. Keith, I want to get back to that leadership position. If, at least for the time being, you're downgrading tech to a neutral, who takes the baton and leads stocks forward? Because you're still bullish the overall market.
I am, but I think shorter term, after that upgrade in late April, we're looking more for a choppy kind of consolidation period for the overall market. So I guess on a shorter term basis, we're a little bit less, maybe less bullish. But the reality, markets typically move 2 steps forward, 1 step back. And, tech's up, 28% this year. There's only 2 sectors outperforming. I think, as far as the sector positions that we have in overweight right now is still communication services. So that's still more of a growth sector, but it's a kind of a different composition as you think about the Metas and the Alphabets of the world. And we also have that offset with utilities because we just think it's going to be a bit of a choppier market. So I think it's more of a little bit of patience right now. I don't think that this market's going to rip higher from where we are right now. I think it's going to kind of have an internal rotation. I do expect that, all year long, people have been waiting for a broadening theme. I think there might be some more convergence, meaning if tech's going to consolidate a bit, maybe some of these other areas start to do a little bit better shorter term, like the financials, like the industrials, like energy. But again, I think there's going to be more of internal rotation. It might be frustrating for both the bulls and the bears near term. Ultimately, we think this market still has legs because the average bull market or the median's over 100%. We're about 50% in, and we don't see recession risk over the next 6 to 12 months. So we ultimately think it moves higher. But again, a rest after this move up is our call.
So by the way, when you're talking tech, you mean specifically the hardware makers, the S&P industry group, INFT, which is, like computer and chip makers, as opposed to communication services. I still think of them as tech. Facebook and Google, it's more than just T-Mobile these days. But you think the big hyperscalers, you're still bullish those companies?
Yeah, well, when you look at the S&P technology sector, the biggest holdings in there, again, I'm not having individual rankings on them, but you have Apple, Nvidia, Microsoft are the top 3 names in there. So we just think, they've been driving the gains this year. They're big cash flow machines as well. But we just, again, after you've had the biggest outperformance on a 1-month basis for the last 20 years, and the big part of that last move was an increase in relative valuations. And then you look at things like the equal weight S&P, which was down on a relative basis about 5%, small caps down about 7% on a relative basis. We just think there's going to be probably a little bit of that rubber band coming in for tech, and the other areas kind of moving up, some kind of convergence. So maybe a little bit of a broader theme. But as we have that kind of choppy period longer term, we would be using any weakness to actually have an opportunity to get back into tech. We just think it's due for a breather, and we wouldn't be chasing it today.
By the way, Keith, Mike McKee was talking to us about the labor market softening, consumer confidence, at least the Conference Board coming out this week. We're also getting a lot of housing data with house price index coming out, new home sales coming out. He was talking about Case-Shiller. Those are 2 areas, at least consumer discretionary and real estate, that you still want to stay away from. You're still underweight those. When do you see that turning around?
Instead of trying to predict when it turns around, we look at some of the things I mentioned earlier, the way the evidence. So we look at relative price trends to turn around. We look for earning trends to start to show some improvement. We're not seeing it yet, so we're just going to be patient until we see that. But I will say it's more broadly to the economy. There's an interesting paradigm right now where we have this normalization in economic growth and slowing inflationary pressures. And earlier when we saw interest rates coming down, inflation coming down, that would have been really good for small caps in some of these real cyclical areas. But I guess right now the market's really saying, okay, we're slowing down, but they want to make sure it's not slowing down too much. So we're kind of in this little bit of an odd short-term period. We ultimately think the economy will remain resilient. It's cooling, but not weak. But again, I think that also leads to a bit of a choppy and near-term trade.
Is it still, all about AI, Keith? Over the weekend, I was in Best Buy with my dad, and he was saying, I got to get one of these new computers that's got AI. I'm not sure he fully understands what that is or if they do yet, but that's been kind of the theme of this market, that, consumers are going to have to go out and upgrade. Businesses maybe upgrade in terms of PCs, for example, because of AI. Is that revolution really going to pay out?
Well, I think as far as the productivity gains from AI, I think we're actually very early stage. Now, the one thing when you look at the market, you have to dissect things a bit, right? Semiconductors right now are up 30% over the last month. We all know the Nvidia story as well. But I think what will happen over time, when you think about like some of these software companies, you'll see incremental gains. In other words, it won't be revolutionary there. They might say, hey, we have some new AI tools and we're going to charge it 3 or 4% more than we did before. So it will be an incremental benefit for a lot of the software names. But I do think, as you think about it, I was just talking to my wife this morning. She's got an iPhone. She's looking to upgrade. And I said, you may want to wait till after September, because AI is coming out. I just upgraded my phone. I wish I would have waited a little bit because, everyone wants the latest and greatest. So I think it will generate kind of that upgrade cycle, not only on PCs, but also iPhones. So I think this will be the secular theme of this bull market. So again, I want to make sure people realize we're not bearish, but again, you move so much in a short period of time. It's saying, when do I want to deploy capital in a more meaningful way? And right now, we just don't think it's that time. We think we'll have a better opportunity to do so. But we do think the AI theme is the theme of this bull market.
What about the Fed? I can't let you go without asking your take on FOMC policy. Nancy Tangler, I heard this morning on Bloomberg Radio from Laffer Tangler Investments, saying she doesn't really listen to the Fed speakers as much as she watches the data, and she thinks, as a lot of people do, that they're going to have to cut more than the dot plot showed they suspect. What's your take on cuts this year and cuts going forward?
Yeah, we were pushing against the market view of 5 or 6 cuts early this year. We now expect 1 or 2, which means we're probably close to consensus at this point. We think inflation is moving down enough for them to cut rates. The one thing I would really say what you want to watch instead of the speakers, watch those weekly jobless claims. They've been inching up the last couple of weeks. If we see another move up in the next week or 2, I think that gives them more ammunition. Our base case is something probably around September and 1 or 2 this year. But I do think, they're still restrictive because, even if we argue that the neutral rate is, now 3 or 3.5, it's not 5 or 5.5. So we think it's time to start moving later this year.
All right, Keith, great to get some time with you. Thanks so much for joining us. Keith Lerner there of Truist Advisory with some spot-on calls in this market. Joining us now with a look at the stocks moving ahead of the opening bell, here's Abigail Doolittle. Abby?
Well, Matt, you both were just talking about Nvidia, so let's take a look at those shares, because as you had mentioned, if the loss holds, we will have Nvidia down for a 3rd day in a row, losing. At this point, it would be on pace for an 8 to 9% decline, the most and the longest since early May. So some of that AI Nvidia craze backing off, but some of the consolidation around that massive uptrend into last Thursday. The stock had been up 180%, somewhat healthy. On the other hand, Micron, the chip maker, the DRAM and storage memory company, it is up ahead of earnings on Wednesday. Citi is saying it's a top pick, and also some analysts are saying that there's a chance that they will beat the midpoint, and B of A recently came out saying that Micron could be a beneficiary of AI. AI, of course, being the big driver for so many of these tech stocks. And then finally, Alnylam, the pharmaceutical company, biotech company, the medical company, they have a very positive result in late stage phase 3 trial result to their heart disease treatment. It was positive. The primary endpoint was met. And importantly, that treatment, Matt, does reduce patient deaths and hospitalizations. Those shares soaring.
All right, Abigail, thanks very much. Abigail Doolittle there talking to us about some of the individual movers. We'll check back in with her later on in the program. Coming up, the latest Bloomberg Live Pulse survey showing investors are getting nervous about the market. We'll break down the results next. This is Bloomberg. Bloomberg releasing the results of our latest Markets Live Pulse survey today. The results showing investors feel the 2024 bull run is almost over. The respondents saying the S&P is the most overpriced asset in the market. Joining us now with the results is Bloomberg's Kristine Aquino. And Kristine, we were just talking about the fact that if investors are worried, they're probably buying as well.
Yeah, it's interesting, Matt, because in the same survey, of course, we have people saying that they are very worried about the rise in the S&P 500, 31 record highs just this year alone. I mean, how much farther can it really go? But at the same time, when we ask them what is the best trade that you're thinking about for the second half of the year, it is still largely stocks. And so on the one hand, you can see that people are, in fact, getting worried, climbing this wall of worry, but at the same time, they're not necessarily seeing better alternatives out there in this current market environment.
I mean, if you look back at bull markets throughout the last 100 years or so, they roughly double throughout their lifespan, right? And we're only up 50% since the bottom in 2022. So at least Keith Lerner from Truist was saying we still have more room to run.
Yeah, absolutely. And I think we're also entering quite an optimistic period for stocks. We have seen some analysis from Goldman Sachs, I believe, showing that the first half of July tends to be the best performing 2 weeks for the S&P 500. This is based on what, like a century's worth of research. And so you can see that there is quite a bit of optimism in the market at the moment. And it's interesting to see as well that that optimism isn't just necessarily coming from the outlook for monetary policy. It's also coming from the outlook for various sectors, particularly in big tech and the future of AI.
Right. I saw last week, I think, a note from ISI saying that they expect 8% earnings growth this year, 5% earnings growth next year. So you do see, earnings behind the gains. You don't see really high valuations. Yes, they're lofty, but they're not frothy right now in terms of the price to earnings going forward. How do you find investors talking about earnings?
Yeah, I mean, I think it's interesting because there is, again, a lot of optimism in earnings, particularly when it comes to the big tech sector. I think there is a little bit of divergence there between big tech and the rest of the market, right? And this is where we kind of bring in the idea of this K-shaped stock market where a very concentrated amount of companies are enjoying that kind of earnings windfall, while the rest of the sector, not necessarily so. And I think this is where the worry stems from. And ultimately, people do think that stocks aren't necessarily going to continue this meteoric rise. They are expecting, a majority of the survey respondents are expecting a 10% correction, but not until 2025.
A correction Mark Cudmore was talking about this morning is expected from him as well. In terms of the broadening out, I guess that's the big question, right? Because we've seen the earnings growth really concentrated in those magnificent 7 stocks. Do the 493 eventually catch up?
Yeah, I mean, great question. And hey, honestly, I mean, it's hard to kind of really see the momentum in this particular sector stalling anytime soon, just because the hype is still very much real. Investors are very much willing to buy into anything related to AI. We've definitely seen that from the performance of Nvidia overtaking the market cap of both Microsoft and Apple, and then also the related stocks in that sector catching up as well. TSMC, another one of these performers about to crack that $1 trillion milestone. And so, yeah, we're definitely just seeing still a lot of momentum into this trade. I think the question for the second half of 2024 is, I think, like particularly for Nvidia, it is very much dependent on capital spending from its other big tech compatriots, right? And so it's just a question of will they want to keep spending on AI tech for the rest of the year and into 2025?
Absolutely. I love the SPLC a screen for Nvidia, so you can look at all the customers and try and tally up how many billions they're going to spend. Kristine, thanks so much for joining us. Kristine Aquino there from the MLIV blog. Coming up, the morning calls, and then later Ann Berry joins us, Threadneedle founder and partner. She's going to tell us where she sees opportunity to buy the dip and name a few specific stocks that she likes. This is Bloomberg. Good Monday morning. I'm Matt Miller. This is The Open. We're looking at futures slightly down on the S&P and the NASDAQ as Nvidia falls for a third session in a row. Time now for some morning calls. Look at some of the analyst recommendations on Wall Street this morning. First up, Citi is upgrading Carrier Global to a buy. The firm says the company, which makes air conditioners, is well run and sees room for further upside in this heat wave. Next up, Goldman Sachs initiating coverage of IBM with a recommendation of buy. Goldman believes Big Blue is on a path to successfully complete its pivot to long-term growth. And finally, Citi, again, cutting ResMed to a neutral. The firm is downgrading the breathing machine maker following additional clinical data from Eli Lilly that showed its weight loss drug reduced the severity of obstructive sleep apnea. Again, taking a look at the markets as we see big tech, at least in the shape of Nvidia, down in the futures market. We see S&P futures down 0.1%, NASDAQ futures down about 1/3%, and Russell 2000 futures actually up about 0.1%. Can small caps come back? Can you see it broadening out if you lose leadership from Nvidia? It's lost over the past 3 sessions. If it does fall today at the indicated level, about $300 billion in market cap. If you take a look at what's going on in the bond market right now, there's a lot of questions about what will come out of the Fed, what will come out of PCE. We were talking about that with Mike McKee a little bit earlier. You see the U.S. 10-year yield right now really unchanged, but at 4.25. It's been as high in the last couple of years as almost 5 and as low as 3.80, so right in the middle of the range there. And if you take a look at the euro, you see real questions about what's going to happen in France. The French go at the end of the week to vote in the first round of elections. The euro had been bouncing back and forth between 108 and 107 after that snap election was called. Right now it's 107.38 and on the rise, but the question is, can that weaken more if the far right wins the first round of voting, and will they go on to win even possibly an absolute majority in terms of the total parliamentary seats there? That could really throw into question investors' commitment to European debt. Coming up, Ann Berry, Threadneedle Founder and Partner, joins us. She's going to tell us how she's navigating what she calls an expensive market and talk to us about a few specific stocks that she likes. This is Bloomberg. This is the countdown to the open. I'm Matt Miller. We are moments away from the start of trading and seeing soft futures on the S&P 500 down, but just by 0.04%. NASDAQ futures falling further as Nvidia is down for the third day in a row. The chip maker on track to lose $300 billion in market cap over the last 3 sessions, or the last 2 plus 1 if they continue to fall today. One stock to watch at the open is Coinbase, falling alongside other crypto-related stocks. For more on that, we're joined by Bloomberg's Abigail Doolittle. Abby?
There has been some real weakness for this crypto space, Matt. Last week, Bitcoin fell more than 4%, its second worst week in 2024. And we, of course, have had Bitcoin in a bit of a range for much of this year, basically trading between about 60,000 and upwards of 70,000. Right now, heading down toward those important support levels. I would argue if 60,000 holds or thereabouts, we'll probably see Bitcoin bounce back higher. The next level to watch below 60,000, around 56,500. And this, of course, is a very technically driven market. If that level were to fall, we probably will see Bitcoin fall very quickly back below 40,000 or even to $30,000 per Bitcoin toward the long-term uptrend. Bitcoin over the last, let's call it 6 years or so, has done that 1, 2, 3 times. Some consolidation of that bullish long-term uptrend. I would say, just from a pure chart technical standpoint, Matt, it does seem very likely that we could have that happen. It may not be right now. It may be after another upswing up and then back down. Something else that I would bring into this mix, Matt, there is some talk that there's a little bit less demand in terms of trading those Bitcoin and the crypto ETFs and some of these related stocks. But another thought here is that Bitcoin, a couple of years ago, when it was thought that the VIX was dead, served as a risk-on, risk-off barometer. So
yes.
Right now we have it stuck in a range, but if it were to break down, that could be some tell that some of this bearishness that it seems that some of the managers out there are thinking could happen, or at least that we've hit the peak for the year, maybe that comes to fruition.
Yeah, I was just going to ask you, Abigail, do you talk to investors who look at Bitcoin as an indicator for the broader market?
So I really don't hear many professional investors talking about that, but it's certainly a narrative that comes out. And it's interesting because many people talk about Bitcoin as digital gold. If that were the case, we would see Bitcoin soaring to new all-time highs right now on fear that maybe we are a little bit overdone in the market. Maybe we are going to see some sort of a rotation into value over growth, that long-wanted rotation. But we really don't see that. When stocks and commodities sell off, both of those are pools of risk-on assets. We also see Bitcoin and the crypto space sell off.
Well, Abigail, I mean, if it's digital gold and you thought there were going to be 5 or 6 rate cuts, you wanted to load up on it. But now that you see maybe there's only going to be one, you let a little of that go.
That's an excellent point for sure. And I think that that's a piece of what we've seen with actual gold. That's a great point, Matt.
Abigail Doolittle, we'll get back to you in a little bit. Right now, I wanted to get over to shares of Nvidia extending their losses this morning. As I said earlier, on track to wipe out nearly $300 billion in market cap. I think we've already seen $220 billion go over the last 2 sessions. That just shows you how big this stock is. Bloomberg Technology co-host Ed Ludlow joins us from the West Coast with more. So, Ed, what's the story with the chip maker?
Yeah, I think the story is the concern over valuation and how far we've come on Nvidia. You're right, we're down for a 3rd straight session, down more than 2% as it stands. The first time we've had a run of 3 straight days of decline since May 9th. You will have seen what was probably the most read story on the Bloomberg terminal and Bloomberg.com over the weekend, which is whether you're on the sell side or the buy side, a lot of people are having trouble forecasting or predicting top-line growth when it comes to Nvidia because they're growing at such a rate. You know, the story makes the point that Nvidia is the most expensive stock on the S&P 500. But if you look at it as a price to sales ratio issue, it's trading at 23 times forward 12-month sales. It's really hard to do the math. They use this starting point in the story of the April quarter of last year, 2023, which is when this really explosive top-line growth started happening. And even against the company's own next quarter forecasts, since then, every quarter, revenue has come in about 13% greater on average than the midpoint of the forecast that management gave. That's kind of the math and markets and analysis side. On the product side, NVIDIA's in this really interesting situation where it commits to bringing a new generation of AI accelerator to market every 12 months. And the concern for some is that, well, hold on, you have this big backlog of business and supply constraint is a big boost to you. But if you keep bringing in new technology, won't you have a really big pool of frustrated customers who say, hold on, I've just waited 2 years for the H100, and now you're telling me that your latest AI accelerator renders the thing that I spent so much money on obsolete? And Jensen Huang's answer to that has always been, oh, it's really easy to swap them in and out. So it's an interesting story. The stock had opened down 3%. 30 or 60 seconds ago. We're now down 2%. And I think we're going to be having this conversation every day for the next 6 months, probably. Yeah, absolutely. Nonetheless, it's a great day to tune into Bloomberg Technology. Ed will be co-hosting that show with Caroline Hyde, so tune in at 11 a.m. Eastern Time. Some M&A news this morning with RXO agreeing to buy a UPS unit for $1 billion. Bloomberg's Alexandra Semenova joins us with more.
Good morning, Matt. Well, UPS said that the goal of selling its Coyote logistics business to RXO is so that it could focus more on its core shipping business. The move comes about a decade after it purchased Coyote Logistics for $1.8 billion. It's now selling the unit for just over $1 billion. The purchase makes RXO the third largest broker transportation provider in North America. The deal is, of course, subject to regulatory approval and is expected to close by the end of this year. UPS said that it will update its financial outlook when that transaction is finalized. UPS Chief Executive Carol Tomé told analysts during its fourth quarter earnings call that the business had been a drag on UPS's bottom line with a very low margin and the revenue way down since the COVID-19 pandemic. RXO shares are up about 14%. That's the best move on record. UPS is little changed and a pretty positive reaction from Wall Street on this deal. Barclays says that it looks favorable from a valuation and commercial perspective for RXO.
All right, Alexander, thanks very much. Alex Semenova there talking to us about some M&A action. Joining us now to talk about the market and some individual stocks, as well as Ann Barry. She is Threadneedle founder and partner of Threadneedle Ventures. Ann, thanks so much for coming on the program. Let's talk first of all about the slight pullback that we're seeing in Nvidia. I guess it's not necessary for Nvidia to continue to rise for the whole market decline, because a broadening out would do a great deal. But it does seem to be the bull case for most.
I think it is a bull case. I think the little pullback we've seen is a bit of profit taking, to be honest, Matt. And don't forget, there's always in the back of people's minds, when are there going to be competitors coming out with new chips? You know, we've got a lot of big names going after it. So I think when people get nervous, they take a little bit of money off.
But it's a long way off, right? I mean, everyone we talk to says the second best performer is far away from what Nvidia's chip technology can provide. So what do you think about this market continuing to run? I mean, we had an MLIV survey saying a lot of investors are nervous about it. To me, that just says we can continue to climb a wall of worry.
Look, I do think it's an expensive market. I've been saying that for a while, and yet it continues to go up.
Expensive in what terms?
Well, if you look at the equity risk premium, right, it's still extremely small relative to historical levels. In a world where we still have a lot of uncertainty, to your point on this MLIV survey, consumer sentiment is starting to wobble. We'll see more data coming out on that this week. One big canary in the coal mine stock I'll be looking at this week, Matt, though I don't trade in it, is I want to hear what FedEx has got to say about demand. You know, that has typically been a bellwether stock for trying to get a sense of what the macro outlook has been. So I think there is some uncertainty out there.
I think there is definitely concern about the consumer. That's what I hear from the investors that I talk to. The housing market, the real estate industry still has big problems, and yet people continue to be bullish. Julian Emanuel from ISI last week came out with a target of 6,000, raising it from 4,750. So it does seem like there are very few, at least strategists at big banks, concerned enough to be bearish this market.
Well, I think that there are a couple of things driving that really big target that you just mentioned, right? I think people are saying, look at where the market is now before the rate cuts have even come into fruition, right? So if you look at tech in particular, if you look at the growth stocks, if they're sustaining these valuations now despite uncertainty, what is it going to look like when rate cuts get real? Right, so that would be a driver to the upside. The other thing is, too, when we look at the Fed balance sheet, when we look at liquidity, there is still an enormous amount that's continuing to push into the equity market, which, by the way, Matt, is only going to get bigger if this deficit, the national deficit, doesn't get under control. So I think there's that element, too, of there's still going to be a lot of cash coming into the market over the long run.
In terms of some tech stocks that have lagged behind, Salesforce is one of them, CRM. What do you think about this stock? You have it in the three names that we're going to be talking about today, and I imagine you think the 10% drop or so that they've had this year is a good point to get in.
To me, it's been a buying opportunity. If you look at where it's valued on an EV to sales perspective, if you look at it in terms of its profitability, I happen to think as Salesforce continues to execute, and execution is the name of the game, against integrating Slack and other acquisitions, against getting operating leverage, as it continues to push ahead with its go-to-market strategy, driving growth, I think we can see 200 basis points of margin uplift. And I think this one down the line becomes a dividend yielder. It's not there right now, but it's got a free cash flow profile that would support it at some point.
Well, everyone's talking about the iPhone upgrade cycle benefiting from the small additional AI, tasks that they're going to be adding to that. I would imagine Salesforce has the same impetus.
Well, I do think that it's, as a software company as opposed to on the hardware, I do think that Salesforce has that benefit. It's been quite good about talking about generative AI. If you look at how Gen AI has been articulated across a lot of companies, Salesforce has been one of the ones to really point to a specific monetizable strategy that hasn't been true of everybody else.
What about Palo Alto Networks?
I feel like I've become an evangelist for Palo Alto Networks, actually, Matt, a little bit. I've been buying the dip on this one. Palo Alto Networks is going to market with what I think is a pretty aggressive strategy to get new customers. It's offering to eat the cost of getting clients to switch if there are a couple of months where they have to have 2 providers at the same time to make that switching decision. I think it's a bold strategy. It's executing against it. And when I talk to clients, when I talk to companies about how they think about cybersecurity, what is the strategy they want? They want single providers. They don't want lots of different providers patchwork together, and Palo Alto Networks is coming with a holistic solution that's gaining real traction.
When I saw that name this morning, I instantly thought of Palantir.
Yeah.
Palo Alto is twice the size.
Yeah.
But I just wonder why Palantir doesn't do some catching up here.
Well, it's interesting. If you look at the net margin, right, so net margin of these businesses, Palo Alto's is higher, which is not atypical of a true pure play software business. Palantir has always had this bit of a debate around it, really from the dawn of its existence. Is it a consulting company? Is it a software, a service company? How should it be valued as one versus the other? And SaaS tends to get the higher valuation. Palantir's story is, I think, a little mixed. Big personality in the CEO, though. We were talking about it, Alex Karp. Not far from the headlines quite often.
He made some very interesting comments about the West being the best, with the exception of our universities, which he has a very negative opinion of. We don't need to get into that. Obviously, this is all techie stuff, software stuff that we've been talking about. But I noticed John Deere is another stock that you like. It goes the other way, and they've had real problems with grain prices last year coming down substantially. Farmers have taken a real hit.
Yeah, they have. Look, anytime you've got the kind of commodity exposure that John Deere has, it's never going to be an easy ride. It's going to be bumpy. But if you take a big step back on this one, and I look at this truly over a 10-year view, not a near-term view, I say here is an absolute titan in the ag hardware business and the machinery business. You mentioned earlier, Matt, the Apple iPhone replacement cycle, right? There is going to be an agricultural equipment replacement cycle. It's going to get more pressing. It's going to be more data-driven. And John Deere is the tip of the spear on precision ag. And I think as AI gets infused into that, this is one where you've got a manufacturing business that really stands to gain from it in a very specific and tangible way.
And a stock that's actually fallen as well. Again, a stock that's fallen. This one down almost 6% year to date. So you think it's a good entry point? It's
a good entry point, I think. But again, it's a long-term hold if you're really willing to ride out the commodity cycle with it.
All right, Ann, great to get your picks. Thanks so much for joining us. Ann Barry there of Threadneedle Ventures. Coming up, investors weighing political risks this week.
The stakes here, I think, are very high, not only politically, which is obvious, but I think also for markets. You know, you all talked about, sadly, it's politics, but, you know, politics and U.S. political stability, you know, is an underpinning of the market that's been taken for granted so long that most investors don't even think about it.
That conversation next, with so many elections and a big debate coming up this week. This is Bloomberg.
The stakes here, I think, are very high, not only politically, which is obvious, but I think also for markets. You know, you all talked about, sadly, it's politics, but, you know, politics and U.S. political stability, you know, is an underpinning of the market that's been taken for granted so long that most investors don't even think about it. That's starting to be tested now, not just in the United States, but the UK, France, and beyond.
That was Terry Haynes of Pangea Policy speaking earlier on Bloomberg Surveillance. The first presidential debate between President Biden and former President Trump is scheduled for Thursday night in Atlanta. Joining us now with more on the political risk this week is Annmarie Hordern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. So it's going to be something everyone will want to tune in for, although it's past our bedtimes, and I would think past theirs as well. Do they make that 9 p.m. start so that people on the West Coast can still watch it at a decent time?
I think so. Also, it's prime time. But I think you're alluding to the fact that it's the first time in U.S. history that the two major candidates for the major political parties are the oldest we've ever seen. So there's a lot of firsts in this debate. Also, the fact
they were the oldest last time, too.
Also, for the fact that this is the first presidential debate that's this early on in the cycle. So this is really going to kickstart all the noise we're going to hear and trying to separate, at least from a market's perspective, what Terry Haynes was talking about there, some of the rhetoric from the policy as we gear up for November 2025.
So what will we see in terms of the major differences? Because a lot of the policies that President Biden has pushed forward, I think of the most recent tariffs, right? Or trying to bring production, manufacturing back to the U.S. have been a continuation almost of Trump policies.
Yes, there are some policies where we have seen this administration continue on from what we saw from Trump, basically a handoff when it comes to things like tariffs, or we've seen this administration actually take a step forward when it comes to export controls on China and when it comes to tariffs. We just had the release of e-tariffs of Chinese imports coming in, EV imports coming to the United States, 100% on those tariffs now. So you'll hear a lot of the same rhetoric potentially on China, but there will be vast differences when it comes to things like inflation, at least from the noise. Former President Trump is really going to want to paint Biden as destroying the U.S. consumer when it comes to inflation. Over the weekend, he pulled out this prop, which you're not going to be able to do at the CNN debate, of a little miniature TikTok and saying this is what it's like living under Bidenomics. And he said he's going to have Maganomics on day one. So he's trying to really tap into what we see in polls, this concern over the economy and inflation. And for Biden, I think one key thing that's likely going to come up, and he put out a new TV ad today about it, is abortion. Today marks 2 years since the Supreme Court decided to strike down Roe v. Wade. And this is something that the Democratic Party really wants to try to instill, this concern, especially for women and especially in those swing states.
But at the end of the day, for most voters, it's all about the economy. It's all about taxes, what they actually have to pay out of their pockets, right? How will they differ in that term, in that sense?
Well, when it comes to the economy, this still remains to be the number one issue, and inflation still remains to be the number one issue when you ask people their concerns about the economy. And this is something the Biden camp has been trying to explain. Maybe the PCE deflator on Friday will help them. But it's really the issue with the inflation is it's hard to explain that the rate inflation is coming down. People want to see prices come down, and that's not going to happen. Biden is going to come out and call for an increase, likely, he'll say this in the debate, on taxes of those in the millionaire class or the 1%ers, and also raising of corporate tax rate. Trump is going to do the opposite. He wants more tax cuts. 2025, Wall Street Journal editorial is a great op-ed today, actually taking a quote from what Senator Warren told Bloomberg, which is 2025 is tax Armageddon. Tax policy is going to be huge next year because this is when the Trump-era tax cuts, there's a decision that Congress needs to make whether or not they're going to continue them or not. But Biden has said he will not increase taxes on anyone that's making less than $400,000 a year. But these are some of the policy rhetoric we're going to be on lookout for.
Right. The state and local tax deduction is supposed to sunset in 2025, so that's an important issue.
I know you're looking forward to
Well, I think, a lot of people are paying more taxes because of that, certainly in New York. Immigration is still a big issue as well, right? And we saw a flood of immigration throughout the Biden presidency. He didn't really try to make any changes until the last few months. How is he going to win on that issue?
Well, he's going to try to talk about the fact that he thinks what Trump wants to do in terms of immigration. Trump has even talked about deportations. He's going to try to paint that as inhumane. And he wants to remind Americans of potentially some of the rhetoric that unnerves some of the middle of America when it comes to Trump's policies. But what's going to be difficult about this debate is that, of course, it's going to be a lot of noise. You're going to have to really sift through to try to get the policy differences.
Just back from the G7 in Italy, right? You saw how Meloni, I guess, led that. What do you think about the possibility of the far right winning in France? Because it seems like she's doing an all right job in Italy.
Well, I think what Marine Le Pen is trying to do is basically use the blueprint that Giorgia Meloni has set out. Basically throw enough red meat in this rhetoric domestically, but she's not a Eurosceptic, and be able to, on the international stage, work with all the players. And at this point, it's the people who were saying that Giorgia Meloni, they were trying to outcast her, saying that she's huge Eurosceptic. She's actually now the queen maker when it comes to what's going on in Brussels. This is something you see Le Pen trying to do. But what happens in France, of course, you know that President Macron is still going to be the president. So what you're going to have to see here is cohabitation if we were to see the right do well, which polling shows it looks like they're going to.
I have to say, it's one of the most fascinating stories, for sure. Annmarie, thanks very much. Annmarie Hordern, they are co-host of Bloomberg Surveillance and our chief political correspondent. Let's get back to the markets now for some of the price action this morning. We go to Bloomberg's Abigail Doolittle. Abby, what do you see?
Speaking of fascinating, let's take a look at the sector action, because right now we have the S&P 500 up ever so slightly. Moments ago, it was down. The reason this is fascinating, 10 of the 11 S&P 500 sectors are higher, but it's tech that's down 0.9%. A moment ago, down 1%. That's That's why you had the index down just a little bit. This speaks to that importance of that rotation everybody's speaking to. Because of the weighting of tech to the index, you can have all 10 sectors higher, but if you have tech down, you can have the S&P 500 up just slightly or down. Speaking of down, we do have the Bloomberg crypto index down in a significant way over the last, let's call it 2 weeks or so, nearly in a correction. Again, perhaps a tell on a risk on, risk off, or as you were making the point, Matt, perhaps around the Fed.
All right, Abigail, thanks very much. Coming up, the market moving event you need to be watching this week. That's next in our trading diary. This is Bloomberg. Time now for the trading diary, what you need to be watching today and this week. We get the June Dallas Fed manufacturing data in just about 30 minutes time. Tomorrow, the Bloomberg Invest Conference kicks off here in New York City. And on Wednesday, we get May new home sales data. Thursday brings the first debate between President Joe Biden and challenger former President Donald Trump. We round out the week with PCE on Friday. This was the countdown to the open. I'm Matt Miller. This is Bloomberg.